Welcome to this week's roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's dive into the headlines. Government allocates $1.2 billion for vehicle imports. $3.7 billion Sinopec oil refinery deal signed. Deflation persists for the fourth consecutive month. In our top story this week, President Andrukumara Dissanayake announced that vehicle imports will resume, but prices are expected to be at least 40% higher than 2019 levels due to increased demand and the depreciation of the rupee from 190 to 300 rupees per dollar. The president assured that while prices may initially surge, they are expected to gradually decline over time. However, measures will be taken to prevent a significant drop in second-hand vehicle prices, ensuring leasing companies are not adversely affected. The government has also decided to suspend nearly 20,000 vehicle permits, with alternatives under discussion. Vehicle imports, which previously contributed over 200 billion rupees in tax revenue, are expected to inject $1.2 billion into the economy and help achieve the IMF target of 15% tax revenue as a share of GDP. Last week, the Ministry of Power and Energy signed an agreement with China's Sinopec for the construction of an oil refinery in Hambantota. The project represents an investment of $7 billion and is said to have a capacity of 200,000 barrels of oil per day, with a significant portion earmarked for export. The investment is expected to boost employment opportunities and enhance living conditions for low-income residents in the Hambantota region. This development coincides with ongoing discussions between Sri Lanka and India regarding the establishment of a fuel pipeline between the two countries, highlighting a regional effort to enhance energy infrastructure. The all share price index at the Colombo Stock Exchange continued its upward trend, now nearing the psychological 17,000 mark. The banking sector has been a key driver of this momentum, fueled by the re-ratings by broker firms based on possible impairment reversals following the completion of the external debt restructuring. On Wednesday, the market recorded a turnover of 10.6 billion rupees, significantly higher than the weekly average of 7 billion. Meanwhile, First Capital forecast 22% growth in earnings for listed companies in 2025, with the ASPI index expected to hit 17,000. The projection is based on increases in disposable income and the tax-free nature of capital gains earned in the stock exchange. Sri Lanka's key inflation rate continued to be deflationary in December, falling 2% from a year earlier, marking the fourth month of continued deflation. Food prices fell 1% in the month, while prices for non-food items fell 2.9%. According to the Central Bank of Sri Lanka, deflation is expected to continue well into the first half of 2025 before normalizing to 5%. Although the recent 20% electricity tariff reduction could further reduce prices in February this year, the introduction of the overnight policy rate last year is expected to help stoke demand in this regard. According to ASPI Commodities, Sri Lanka's tea production is projected to exceed 275 million kilograms in 2025, provided stable growing conditions continue. In 2024, tea production reached 262 million kilograms, marking a 2.4% increase compared to 2023. Notably, 75% of the tea production comes from smaller tea holder estates, underlining their critical role in the industry. The 2025 target is supported by relatively stable tea prices, currently ranging between 1,110 rupees and 1,300 rupees per kilogram. However, the report cautions that a stronger rupee could negatively impact export markets. In this week's tourism update, in the first 19 days of January, Sri Lanka welcomed over 153,000 visitors. While daily arrivals were recorded at 8,093, this marked a rise from the 8,037 recorded in December. India remains the largest source market in the month, followed by Russia and the United Kingdom. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.